Here's one for your next pub quiz.
Which 14 countries are in the single European payments area but not in the European Union?
If you said any of these countries, you are correct.
These nations are not EU member states.
However, they are in SEPA, meaning they can connect to SEPA Instant. Some, like Iceland and Norway, will eventually be brought under the Instant Payments Regulation once it's copied into the European Economic Area Agreement. Others, like the UK and Switzerland, are outside EU law altogether, but may still adopt SEPA Instant voluntarily through the European Payments Council scheme. So, what does this mean? Well, while most euro area banks face legal deadlines to implement instant payments by 2025, EU banks in non-euro countries have until 2027. For the EEA countries, the regulation hasn't been incorporated yet. Once it is, they'll face deadlines likely aligned with 2027. Meanwhile, banks in SEPA that are outside both the EU and the EEA have no regulatory deadline at all. Adoption there is voluntary.
So, if you are a bank in Norway, should you be worried about 2027 deadline now?
And if you're in the UK, is there any point in getting ready for SEPA Instant at all?
The answer to both is a big yes.
Because the driving force behind SEPA Instant Payments after 2025 isn't regulation, it's the risk of losing your customers.
SEPA Instant requires payment service provider within the euro area to receive and send euro transfer within 10 seconds. Banks have been expected to receive these rapid credit transfers from January of this year and also send them by October.
Consider this scenario. It's November 2025 and SEPA Instant Payments are ubiquitous in the EU.
One of your biggest customers is a thriving London-based fashion retailer that specializes in raincoats. Business is booming.
As a global bank, you have a foothold in every market the retailer operates in, and they have accounts in each region. One in London, another in Oslo, several in Amsterdam, and so on.
With SEPA Instant, they can send and receive payment within EU immediately. No more worrying about cut-off points with Target 2 and classic SEPA payments.
Now, there's more time for late Friday night deal-making during busy buying seasons. They have more cash on hand, can pay suppliers instantly, and even offer earned wage access for daily pay, boosting staff retention.
The retailer wants to extend these benefits to their UK and Norwegian business, but you haven't implemented SEPA Instant for non-EU countries yet. And that's causing issues.
They ask when you plan to. You tell them you may do the UK someday, but it's not guaranteed. And you're going to wait for the 2027 deadline for Norway. So they start shopping around. And eventually they find another bank that offers SEPA Instant for the entire SEPA region and switch.
The point is this: if one bank offers instant payments across all SEPA countries while other doesn't, customers with accounts in non-EU SEPA countries are likely to choose the more connected option.
In other words, banks that delay full SEPA Instant implementation risk losing corporate clients. A bank facing the 2027 deadlines that moves too slowly could see their customers migrate to more proactive competitors.
A unified customer's experience becomes a powerful competitive advantage. Early adapters have a lot to gain by securing market share and strengthening customers' loyalty.
EU-based banks that use the euro already have an edge. Much of the groundwork has been laid to meet the 2025 deadlines. These banks can leverage their existing infrastructure ahead of 2027 and in regions like the UK.
And while preparing additional core banking systems for 24/7 processing may be a challenge, technical solutions exist. Instead of waiting 2 to 3 years to upgrade core systems, bank can deploy a standard module as a quick fix to enable 24/7 processing immediately.
For some, getting ready could be expensive and time-consuming, but there's a lot to gain with action and much to lose by waiting. So be proactive. If you're an EU bank that uses the euro with operations in any other SEPA country, you should act now. Don't wait for deadlines or any other reason. This is about staying competitive and meeting customer demands. Consider extending SEPA Instant to these countries as a matter of urgency. Make it part of your current project if you can.
If upgrading your core banking system is necessary, then do it now. Waiting for the regulatory push has no real benefit. Plus, 24/7 payment schemes will eventually be introduced in the UK, Switzerland, and others Starting now, while payments volumes are lower, reduces risk and builds readiness early.
Granted, replacing 30-plus-year-old systems is a huge task, but there are faster routes to market. It's likely you already use a stand-in module to mimic 24/7 capabilities in the EU. Why not extend this functionality?
This would allow you to meet customer demands, gain a competitive edge, and prepare ahead of deadlines without waiting for complete system upgrades.
So proactively extending your existing solution saves time, money, and stress later. So look ahead. As the SEPA Instant Payment Scheme rolls out, the question isn't whether to adopt SEPA Instant, but how quickly you can do so. Instant payments are becoming the norm in Europe, and waiting until the last minute could leave banks at a significant disadvantage.
If you need help with the instant payment regulation, speak to RedCompass Labs. We are currently helping some of the world's largest banks get ready for the regulations. Reach out to the team today.